Hiya, Warriors. Let's break it down. How you doing, Mike? Ryan, how are you? Good to have you back, buddy. Who else is around here? Mike Bergman and Mike Weissman.
Hey, mate.
Everyone doing okay? How are you, Ryan?
Morning, everybody.
Yeah, all good, mate. All good.
Good. All right. So I have a bunch of foreigners I'm working with today. I didn't plan that line. You know what? I have trouble, stopping the things that come out of my mouth because I don't even think about them before they get out. Anyway, let's start with Kay. Are they checking rates up here?
No, not yet. A bit of comments again, but not yet. Interesting this afternoon will be there's this powwow between at the ECB forum in Portugal in about an hour and a half. We should hear from Ueda, Powell, Lagarde, Bailey. So they're
wow.
A little bit of a chit chat coming up.
So it's time for all these guys to have their summer vacation, and
as well.
I'm sure it's on a beach. Their conference.
I don't know whether they are beach goers. Lagarde will probably go to a beach, and although she has her sunbeds, right?
Oh yeah, right. Yeah.
But we don't know.
Paul, you don't see Paul out there playing beach volleyball or anything?
Yeah, he's a concert man, isn't he? What was it, Grateful Dead or something concert?
Bringing
he was at a Grateful Dead concert.
Yeah.
Oh my God! No wonder they've made policy errors. That all they were all acid heads. So we have a Fed chairman that's taking purple microdot and window pane and orange sunshine before Fed meetings. Okay.
Don't ask me what Bailey's on then.
Yeah. Significant, Ryan, break under, important support in cable 27.
Yeah, it's looking a bit of a move down. Looks to be more euro sterling perhaps than the pound side of things. As Kay mentioned, euros bid up on the crosses. Could be some funny end of month action going on there. Bit of a level right here. This 86.5.
Looks good.
Yeah.
I mean, you had a lot of retests. You had the divergences down here. You had one retest here, another retest, 6.5. 760, buddy. 740. That's the way it looks to me. That's a 4 hour. Let's take a look at the daily. Yeah, very important. Yeah, now I see what you're talking about. This resistance here. Yeah, we get through there. That looks like the 200 day up there, 87.5. Maybe this is the beginning of something even bigger. Let's take a look at a weekly. Yeah, maybe we're gonna, maybe this is it, where we really get some moves and we get to Stel's range again in the 90s. I know it sounds a little Nostradamus right here, but this could have been a completed correction and, from this big move, and now we're going to run again. Just impromptu stuff. So what do you do with cable here if you're not long EG? It's looking pretty heavy. I tell you, I think a lot of analysts have had a tough time with the dollar here. We had that big news day where dollar had, the ECB day, and then everyone turned around and got bullish, and bullish euro, bearish dollar here. Looked like it was breaking down, and now it really doesn't look bad. It's still a higher low, right? So, and do you think, I'll throw this out to everyone, I saw yesterday afternoon, Aussie come in, all of a sudden it was 50 lower. Was that the China data? I mean, China released a lot of economic data yesterday. Was that the effect on Aussie? I'll throw it out to Kay again.
Hi. Well, we have several things, right? There's China, but then also we had euro crosses that puts pressure on the rest. If you look at it, euro dollar has been hanging around, but the rest of the dollar is actually picking up. So that's a part of it. And then overnight we had the Aussie CPI coming in much lower. So the yields market needs to reprice it once more, and that's what weighing on it. And today we have value date end of month, and people listening to us, they know what that could mean. Bit of US corporate action, and that means that all those dollar pairs are bid right now. Cable broke below 126.80, Aussie broke 66.5. The only one hanging around is still the euro. But that again, that could mean those euro crosses. If you look at euro sterling, euro Aussie, euro CAD, all of them, they're very big this end of month, quarter, week. So yeah, I'm as I was saying, I'm going to watch the clock. I think we could actually see pretty decent levels if this goes on into the afternoon around until 4 p.m. London time. Then I'm really going to keep a close eye on where some of those pairs are, because there's one I don't really understand, apart from in sympathy with the Aussie coming down, is why the Kiwi lost so much overnight.
Yeah.
That's has seen a pretty big drop as well. So there we may be seeing an interesting level perhaps coming up this afternoon. And as far as the yen is concerned, I mean, the only ones going to stop this, apart from end of quarter or whatever flows, is going to be the MOF. The rest, I don't see how yen can materially strengthen right now, unless Ueda comes up with something really special this afternoon, or I mean in an hour.
Just an observation that I think it was here. Yeah.
I've got a 65.80 in there, and I'm just below 66.
Yeah. The observation was look at the severity of the decline here and Kiwi, and then compare it to the meager, getting a bounce in Canada, but much more muted, which would tell me maybe there's going to be a decent trade to short it against that major breakdown. Get a breakdown test here, up there around 33.
I'm looking at that level, Dale. I actually on the weaker CPI yesterday in Canada, I bought some dollar Canada in the mid 131s, and I'm looking if I can get anywhere close to that 133 figure 15. I'm gonna be a happy man.
Okay, Stel, you around today?
I'm here and I am watching this like a hawk. Remember, we're talking about this breakdown in dollar CAD when it was breaking down. I think that's going to be a big level, and it's one of those things which statistically has a good chance of working out. So breakdown, retest, and then we keep going. This will obviously depend on the dollar in a big way. I think it's going to be driven more by the dollar than by CAD itself. And we are about, a month away from the next FOMC meeting. I think it's near the end of July, isn't it? 27, 28 or something like that. I can't remember. So we get an inflation print in the US first, and then we get the meeting. And I stand by what I've said, which is that they're going to be pausing and not skipping. I know I'm not in the majority of people saying that, but I think the more numbers we get, the more data we get, the more this will become a bigger probability. Of course, nothing is 100% sure, but I think the chances are a lot higher than what the market's pricing.
Okay.
For the FOMC.
All right, thank you. And with the yen continuing to make higher highs, the bond market's not really responding to it. So I think that the bond market is the smartest market out there, and that they get the economy right more than the stock market and maybe currencies. So the fact that the yen keeps doing this, making new highs and 10-year yields shows me, how weak this chart really is. Because I would have thought with the yen trading here, we would have had a 390 breakout. We're not. And I think Greg has said something, DSI, who gets DSI? Where's US dollar yen? 11, 10?
I haven't got it, but I'm guessing maybe even single digits. I don't know.
Yeah, okay. So, you know, it hasn't really, what I'm saying is it hasn't blown out the narrative that yields could still drop from here with all this yen strength, whether that means anything or not.
I think you're absolutely right, though. Yields have not been strong given what's happening in dollar yen and everything else. So for me, you know, I'm going to say big words. I think we have reached a medium-term top in yields. There are obviously scenarios where we could go up to 4% and above, but I don't think they are likely. So I think we have, and this goes with my view on the dollar as well. I think yields lower, dollar lower in the medium term. But you know, the next month is going to be crucial, because if a skip becomes a pause, it's big. If not, then I think it's big on the, you know, in a different direction. So we have to wait and see what the Fed does, and the Fed leads most central banks, let's face it.
Okay, and tip of the hat to Steve Volge, who said that this was a consolidation after a big decline, and the probabilities were a break, and he's talking about an important level at 58. So we'll see what happens down here at this third drive line around, looks like 62.5, 62.80. But that looks like it's manifesting to me. Anyone know where the DSI is on the VIX?
Nope.
-5 yet? Anyone
maybe lower.
All right. Let's wow, getting on the pound some more. I'll tell you what, it's really you know, I really think it pays to have a scalper's mentality, because it's difficult to have a position mentality. But you know, the dollar looks okay. So I mean, I wouldn't mind buying euro, but not up here. Maybe under this low 108, I'd try it. So I mean, if everything else is already declining, and there's still 80 pips or so in
Watch the clock.
euro, huh?
Watch the clock, Dale. Watch the clock.
Okay. All right. So you don't remember grandfather clock on Captain Kangaroo, do you? You're too young, and I forgot you guys are foreigners. So you have levels, Stel, in gold and silver,
Well,
that you would be interested in, you know.
Gold is broken down. Gregor seems to think, well, Gregor thinks that there's support around 1900. I don't really see it, but of course, Greg is smarter than I am. So 1840 to 1850 is the level I've been calling for ages now, right? I've said it's over 50-50 chance that we visit that first before we go higher. And look at the price action. Okay, yields are marginally lower. The dollar, okay, is a little bit higher now today, but really not doing much. And metal's getting pounded every single day nonstop, which shows you that this is, I'm sure there's a lot of stops being taken as well, because you know that the vast majority of retail is long. But also this looks like it's a continuous push to get, the maximum pain out of the market. And, for now it's working. So I think, as I've said on the chat room, and I think I've tweeted it as well, retail has to get stopped out in a big way. And, if you look at the...
Well, you know what that's going to take? It's going to take 1800.
Yes, maybe.
Okay,
but if you look at...
really...
Yeah, if you look at the IG, they publish their... the positioning basically that they have from the clients. I think it's silver long. 88% of clients are long silver. I mean, this has to go back to 50% for metals to really start moving higher. If you look at what yields have done, what the dollar has done, basically nothing. Equities, they're not collapsing. So what's the reason for metals to go lower? Also, inventories COMEX, LBMA, all those places, they're going lower almost every single day, and multi-year lows. It doesn't make any sense. Everybody's talking about shortages in physical. So it doesn't make any sense. So for me, it's a move that's been driven to kind of inflict the most amount of pain possible. And it's if you're long, it's frustrating. I'm long from just above 23 in silver, and I'm going to add more, but I'm just holding off now because this is just going one way, and it's just doesn't give you any reprieve. Day after day after day. So.
You should never underestimate how long retail can stay offside for. Like one of our guys in the chat room, Father Ted, put up the positioning Forex sentiment in the yen pairs, and something like dollar yen, where everyone's massively short, they're offside an average of 720 pips.
What? Seriously?
That's really something.
So even if you get an intervention, you might get 300-400 pips of that back.
Wow.
Yeah, looking at. I mean, a lot of people talking 49. I can see how they're talking about that because you basically had your breakout at 38, low as 28, never even tested the breakout, and would give you 48. But I thought there was going to be an interim correction. Maybe
there's a lot of the market looking at 145, Dale.
45 they're talking.
That's the intervention level, the first one, and then through there to 150. So it might become a bit of a self-fulfilling prophecy if everyone starts piling into shorts at 145.
Okay.
And then they get spent.
All right. And so much for the throwover being negated in S&Ps. It was for a day. Is this going to be a failing rally and we break again? Maybe.
The pullbacks are tiny, right? That's the thing. Technically, it's still looking very strong. We keep saying this every day. Technically, there's absolutely no reason to be going against this. Not yet.
Yeah, there are a few chinks in the armor I wouldn't mind showing. And tech is it's all tech still. It's hard to find other sectors that are doing anything. Oh, look, Bitcoin false breakout over 30. I don't know. We'll see. But there are some tech stocks that look like they peaked. So I look at here we go, AMD. Pretty nice break. Maybe we get a failing rally there. Here's the star of the show, NVIDIA, right? And could we get a third drive? So my point is AMD came back and filled the gap. This gap. I think NVIDIA will eventually. And really one of the other leaders that is not making new highs is Microsoft. So, I'm watching these big guys because they're what's been carrying the move. And then you're getting rallies and things that were in bear markets before. So they are rotating. Look at CAT. Remember how I was negative CAT? Look how it came back. So, I think there's going to be rotation and people are going to come out of tech. So the market could look bad if they come out of tech, but, they're going to, almost like industrials. So just a few cracks there. I forgot what else. Those are really the major ones I'm watching. I mean, here's still Goldman Sachs. What's wrong here? They always make money, don't they? So, that doesn't look that great. Here's the key chart that if they could get some pressure on this, it's trying to hold right now. But if this rally fails and we're not going to take out 44 and we start to break down, I think that'll be a catalyst. And it looks incomplete to me because of 2. And really, it's rallied from being oversold, but not much of a rally. So I'm still in the camp that I don't believe this banking flight from banks is over yet. So And I think that, the rest of the market could go crazy, but the banking sector is like the central nervous system of the economy. And
I think that could be a chart to keep an eye on tomorrow, for tomorrow's open, Dale, because we get the bank stress test tonight after the close.
Interesting. Okay. I wonder if they're going to, if they change the stress tests, which the previous one did not include what their holdings were, what they had on the books, interest rate risk, right? It was, they were testing for what happened in 2008, and where the banks are okay for that. But this, flight capital just for higher rates, and people leaving banks in 30 seconds to go somewhere else. I don't think that's solved.
You can be certain about one thing, Dale. There is absolutely no way they would ever stress test the banks without knowing in advance that banks would pass the stress tests based on how they've reversed engineered them, because that's what they're doing in essence, right? Instead of actually stress testing banks to see if there are any weaknesses or any potential problems, they use stress tests to increase confidence in the banking system, and not the opposite.
Right.
Checking if there are any reasons not to be confident in the banking system. I had talked about stress tests a long time ago. A couple of years ago, when they were stress testing banks again, and there was no scenario under which they thought that the economy can be in a recession, while treasury yields being anything above 1%. So in essence, they're stress testing for specific scenarios, but they're omitting to stress test for scenarios that are plausible, right? Because theoretically speaking, stress tests are made to investigate what's going to happen under a multitude of scenarios. Some of them less likely to happen than others, but you never know, right?
Yeah.
Stop making sense, Steve. Seriously.
Yeah, I will.
Okay,
by the way, I want to just comment. Sorry, Dale.
No, sorry.
Our friend DJ's here says housing sector is doing okay. Yes, in the US, we've seen housing data recently doing well. Having said that, I was reading a piece about housing data, and I was actually looking at the chart from St. Louis Fed. The average price is going down. There's more activity, but the average price is going down. Actually, characteristically, the average price from Q4 2022 to now is about 10% lower.
Makes sense.
It makes sense, yeah. And also, I was looking at the chart of total US debt, which is now, by the way, above 32 trillion, right? Yeah.
Yes.
Trillion. From the day that the debt ceiling was raised until now, we've had 700 billion, or roughly there, of more debt. And there is, at least in my eyes, there's absolutely no way this is going to reverse. So people, I'm guessing, at least that's what I would be doing. They're guessing, okay, where is the long-term trend for housing? And remember, you buy houses usually to live in them, to have them. You're not going to flip them in a year unless you're doing this for a business. So they're like, yeah, I want to own a house and live in it for 30 years. What am I going to do? The price will keep going up indefinitely. I mean, that's a given. Mathematics 101, economics 101. So they look for any kind of dip to get in and buy. Of course, it's more expensive to buy now in terms of the mortgage that you're paying, but that you can perhaps buy a shorter fixed rate mortgage and then refinance when rates go lower, which they will at some point. There's all sorts of things you can do, but when house prices are dropping, this is the definition for me of buy the dip. Because that in the medium term, unless something dramatic happens in the area that you're looking to buy, everything keeps going higher. I mean, it's only logical. So the activity is going higher, but the prices are going lower, and that's a very interesting point. To
by the way, you know how they call the bill that they voted to suspend for a couple of years the debt ceiling failure, right?
The Kim Kardashian bill. No, what was it called?
Fiscal Responsibility Act.
No, seriously.
I'm not sitting you. I'm
Oh
not
man,
joking.
that's funny. That is funny.
Yeah. What is the fiscally responsible thing to do? Suspend the debt ceiling so we can be as fiscally responsible as possible.
Yeah.
Big level here on TLT 104. Talked about that's where I thought it had to get through. So far it hasn't, but you get through 104, measures up to 108, 109, which is, you know, the big breakout area of an ascending triangle up here. So we'll see. I think Jim Welsh thinks he could buy him down here one more break. So we'll see what happens.
So lower yields, basically, right? TLT
if we
is
break out, yeah.
yeah.
If
Okay.
we go down, Jim thinks that, you know, he's looking to buy him around 98, so that would imply higher first.
Yes, and then lower.
Yeah. So
I like Jim. I think he's really, really smart.
Yeah. He short the market on a scale in, and you know, first time he's been short in, I don't know, years. So
Interesting.
yeah, some smart guys. So there are some smart guys that are saying, yeah, the pain trade is higher, but there are some guys, and Jim, a lot of it. I mean, if you guys should get his letter, but he shows breadth compared to recent highs and what's going on, put call ratio. You know, maybe that was a high, at least temporarily, at 44, 45, and we get a failing rally here. I don't know. I just think that we might have a difficult July. June was massive. Okay, that June was this, and that was nothing compared to June was this in NASDAQ, right? So we'll see. I certainly don't think I couldn't justify buying stuff here. I mean, yeah, there might be another push, and Nvidia's been the star, and it's starting to show some topping signs. And Microsoft really led the
nevertheless, all that is good and well. Nevertheless, just by looking at that chart you have in front of you, the Nasdaq, at the moment, the simplest interpretation of what we're seeing, until proven otherwise, is that this is another bull flag.
Yeah.
Okay. And look, I you know, I have a hard time arguing with you, because look at what the high did at the high. It's a lot of momentum.
Yep, there is a lot of momentum, and it's very unusual for markets to top based on the technicals we've seen so far. Nothing is impossible, of course, especially, you know, if you get some kind of a surprise that, you know, changes completely the dynamics of risk assets. But in general, I would have to say, considering the period of the year that we're into, usually summer is a quiet period for markets, and quiet markets is what's best for equities. Usually, you usually get a slow grind higher. Second of all, we've had some major issues, you know, temporarily being resolved, like, for example, the debt ceiling, right? Not that I ever doubted that this is going to be the resolution, but let's say some market participants might have been worried unnecessarily, in my opinion, that, you know, we might have some kind of an incident that's out of the way now. We don't have to worry about it for another couple of years. We don't have any strong data that economies are going, as you know, imminently in recession. So no real big, even what was about to happen in Russia was resolved within a weekend before the markets even opened. So you know, I think that the path of least resistance, at least for the next couple of months, remains for equities to keep grinding higher.
Okay, there's your Nikkei. Same thing, little pullback. Yep.
Nikkei, by the way, has had a massive year so far. Of course, at a big extent on the back of a very weak yen.
Okay. Here's a gold miner that has a pretty good look. It hasn't given up as much as a lot of things, you know, so it's on my radar.
Miners have been absolutely massacred over the past weeks, and
well, that's
it's
why
interesting. Even on days when metals are actually not down, they keep going down, which is another one-way market. By the way, do we have a guest today?
Yes.
Oh, Andrew.
Andrew's here.
Ah, excellent.
Okay.
Great.
Oh,
good,
okay.
Good.
Okay, good.
Perfect.
All right.
Enjoy the interview, Dale, and everybody else.
Great talking with all of you guys, team.
Our pleasure as always, Dale.
Yeah, thanks, Kman and Ryan, and
cheers, Dale.
I really love working with all you foreigners. I feel like, you know, we're all you know, we're all brothers through the market, which is like it's like blood in our veins. And anyway, thanks a lot, guys, for giving me clarity this morning. Hope they helped you guys out there too, and could join the team in about 45 minutes on the Morning Edge. Good idea. This is not going to be a quiet summer, to have the support of a community when you're working, you know, somewhat difficult markets over the last month. So Andrew, welcome back to F.A.C.E. How are you, buddy? Let me just get you up here. Oh, he hasn't been promoted.
I'm not sure if he's been promoted yet.
Sorry, I didn't know which Andrew it was, so I didn't promote him.
Dale, you're the host. You can promote
Andrew O'Connell. Got him.
Okay, go ahead and promote him.
When's the last time you got a promotion, Andrew?
There you go.
Okay, nice to be promoted, right?
We are live. Thanks so much for bringing me up, Dale.
Yeah, Andrew, nice to have you back. You come back and you haven't even said anything, and you got a promotion. I bet your employer doesn't do that, but your employer is you.
Exactly.
So I want you to give yourself a raise this week.
Here we go. Let's see how the market does.
All right. So I went to your stream last week. Do you want to show your stuff? I could stop sharing and you could take over.
Yeah, absolutely. We've got a bunch of really good charts to look through today. So let me go ahead and share my screen.
Okay. Yes, Jace. All right. You know where it is, right?
Yep. Yeah, I'm just going ahead and sharing here.
So have you been converted that we're in a new bull market, Andrew?
Yeah, I believe we are. I think there's a lot of nuance to that. Let me know if you can see my screen.
Got him up there, yes.
Yeah, I think there's a lot of nuance to that. I think these cycles are happening so quickly now, Dale, where I think the whole reason why we were in a bear market last year was because inflation was really accelerating. And that was the big problem. That was driving bond yields so much higher. And that was just a huge concern for the market. As the bond volatility increased, then you had equity volatility increasing as well. And that was the big headwind. I think the good thing about this year, and I think, you know, really the big reason why the market has rallied so much, is that inflation has come down significantly. So if you can see right here, this is a monitor that I look at all the time. It's our Trueflation dashboard. This thing came off of its peak of around 12%. Now it's right around 2.46%. So I do believe that the bear market that we had, because inflation was just ripping to the upside and it was a runaway freight train, I think that is over. But to be honest, now that we are here and inflation has decelerated so much, now I think the odds of getting, you know, a further deceleration like this are very, very low. So I think a lot of the good news, to be honest, is really in the price at this point. So I think, yeah, this is a new bull market, quote unquote, but I think a lot of the bull market, you know, these cycles move so fast, is already in the price.
Okay. Do you think the S&Ps could see new all-time highs, melt up stuff like a lot of people are talking 50, the melt up guys that were talking 5,400, 6,000 S&P?
I think I don't really see that, to be honest. I mean, if we look over here, this is what we've seen year to date so far for the market. And
Yeah,
especially
all
as especially as we get to a quarter end or a end of the first half or even the end of a year, I always like to take a step back and just take a look at, where has the market been so far? And yeah, as you just said, the semiconductors are up 40% this year. Blockchain ETF up huge. The XLK mega cap tech is up huge. Same thing as the ARK Innovation ETF. So we're basically seeing a reversal of last year's price action where all of those areas of the market really suffered. Now they've all bounced back. So this has been a complete unwind. But with that being said, a lot of people are discussing this, but the participation in the market, just really is not that great. So if we look, for example, let's pull up, we will go to like the small caps. You can see here.
The Russell?
Yeah, the Russell. Yeah, the small caps are still trading very close to their lows. So I believe, market participants, they're essentially pricing in that, hey, inflation is getting a lot better, which is good. We can start to buy some of those growth assets back. But hey, the economy is actually getting quite a bit worse. Now we have interest rates that are really high. That's going to cause a lot of stress in, the real estate sector, banking, which we've already seen, et cetera, et cetera.
Okay,
so we're
let me ask you
not
this.
seeing anything in the smalls.
Let me ask you this.
Yeah.
Your comment or the adverb you use after the banking problems was seen, past tense. Do you believe that that's behind us? Really?
No, I don't think so. I mean, we have this regional bank ETF right here, the KRE.
Yeah, right.
And look how close it still is to the prior lows. Like we've had a move off, like I guess you could call this a relief rally, but there's still no confidence in this group. I think, to be honest, man, like the major change is as soon as this banking crisis kicked off, the Federal Reserve just jumped in and they papered over the problem with their BTFP program.
That's what boosted the market. The banking crisis saved the market, didn't it?
Exactly. As soon as we got that crisis and the central bank stepped in, that was essentially like their flinching moment. And now with 2020 hindsight, we can see that the market has done absolutely incredible since that time. So I think the bank stuff is certainly not over, but I think for markets, everyone has gotten very comfortable essentially assuming, hey, even if there is another situation with banks, the central bank is going to step in, and that's even more bullish for something like the NASDAQ, which I just pulled up over here.
Okay. Bull flag.
Yeah, so the
NASDAQ. This is a daily. So yesterday looks like a breakout. And we pulled back. What's that? Is that a VWAP, that yellow line?
Yes. So this is pretty cool right here. So this VWAP that I drew on the chart, the yellow line, I anchored this from when NVIDIA reported their really good earnings report about a month ago, because I think that's when the market had a very big character change. So now we're essentially at a point where most investors came into this year saying this is going to be a horrible year. I'm under positioned in equities, potentially short equities. We got a fantastic year. All of these trends really accelerated when NVIDIA put up that earnings report. But now we're trading pretty close to the 20-day simple moving average, even though we had a fantastic day yesterday.
Yeah.
Now that we got this chip news, let's see how NVIDIA is actually doing in pre-market.
The chip news about not selling NVIDIA chips to China?
Yep.
Okay, so Michael Bergman saying we're down 13. So I showed NVIDIA, it has a 2-drive formation. So, I would allow the market could still, maybe after this dip. But if that caves, and look at Microsoft as well, Andrew, that led the parade, and That's like almost putting in some type of right shoulder here. Look at that.
Exactly. So my point here is, if we look at the VIX, like it's obviously been massacred.
Yeah.
And now into the end of the quarter, I notice this dynamic all the time. All these investment managers right now, it's like a fight for survival. And everyone is trying to get into the themes that have done really well the first half of the year. I truly believe that this
Window
week right
dressing.
here. Exactly.
Okay.
I think this week right here in the NASDAQ, about like 2 weeks ago, 3 weeks ago,
Yeah.
I think this was a pretty big capitulation where investors were just like, you know what? I got to get into this tech stuff.
Yeah.
And even after yesterday's candle, we've still got some of those players underwater. So I believe that into quarter end, I think the odds of having like some massive sell-off are probably pretty slim. But I think as we get beyond this quarter end and investors can really start actually playing the game again, I think things like this, like what's happening in Microsoft that you just mentioned, same thing with Apple over here. Apple has just been a freight train higher. Now we have to start thinking about what are they going to put up for their next earnings report. And I think that's where we could see some of these trends come under a little bit of pressure.
Let me ask you, keep that chart up there. Now, you see that uptrend that we've had compared to the Qs, where we gap down, gap up, and there's a lot of dots. It almost looks like an illiquid stock to me, the way that chart looks. How where you have to make appointments to trade. It doesn't. To me, it's almost like one bad day can take away what's been accomplished on the left in a hurry, and a few bad weeks could too. So I just that Apple chart, that gappy, it's like a managed stock, and doesn't look liquid to me. And I know they do huge volume, but put any other chart up there and you won't see this kind of spaces in between candles, and it's more of a fluid chart than this. You could put anything up, even Microsoft on the way up. Didn't have dots.
Yeah, let's see Microsoft.
I don't know, maybe it's just something that looks unusual to me.
It definitely does.
I mean, that looks so much. Doesn't that look different?
It definitely does, and even more so like
they all do.
Like Netflix, for example. This one looks like it's really having like legitimate price moves.
Yeah. And it's not the dot, all the candles, there's kind of a rhythm to it, even though it was, with a blow off. So anyway, that's just something I noticed on Apple.
Yeah. So I think these stocks.
I'm underwater on my shorts in Apple.
Oh yeah. That I think after quarter end, that's where we could see some of these sort of disruptions in the market. But even like right here, like in Netflix, for example, it's trading right on the 20-day simple moving average.
Yeah.
I mean, same thing if we just look at the S&P 500. The 20-day SMA, this is a really big level for trend followers. So all it would really take is like, maybe one bad day in the market. Right. And suddenly if we find ourselves slightly below that level, I think a lot of investors have really just been stopped into the market because they're like,
we'll go to 4,200 in a heartbeat, which was the breakout.
Exactly. And there's a little gap here as well.
Yeah.
So this is another good one. If you look over here, this is just what these indices have done for the month of June.
Yeah.
And I mean, look at these performances. Like, to me, this is almost like a good half year's worth of returns.
Right.
In just a few weeks. So like what I notice is with a lot of these trends, they typically accelerate at the beginning of a trend, and they typically accelerate, once you get the capitulation towards the end of a trend. And I mean, this right here in the NASDAQ at the peak, it was up close to 7% for the month. That is not like a typical month in the market. So I think at the very least, like now investors are really positioned for the price action that happened in the first 6 months of the year. In the first 6 months of the year, NASDAQ just went up in a straight line. I believe it's up almost 40% so far year to date. Now everyone's like, you know what? I'm going to catch the next 40% in the second half of the year. And I think at the very, very least, the odds of getting another repeat of a 40% half in the NASDAQ is incredibly slim to none. If this thing were to go up another 40%, this QQQ would literally be well beyond the all-time highs.
So is it your style to just let things pull back and look for entries on the long side, or would you tactically look to take advantage of that correction?
Yeah, I think for right now, for my system, my trend model, which is pretty much what I use to navigate the market, right now it's at a +3. And when it's at a +3, it's pretty much saying the market is in a rising condition.
Okay.
But if we were to get, some action around this 20-day simple moving average, that could change very, very quickly. So for me right now, like, I'm just being cognizant of the fact that, hey, we don't really have a sell signal in the market at the moment. But after this quarter rolls over, I think that's where we could get some mean reversion, or really just some of the latecomers to this rally getting stopped out. I would much rather add some longs if we actually do get, some sort of more meaningful market correction, because we haven't gotten a correction so far in 2023. And I think it would just be a little bit naive to think like, oh, we're going to go the entire year and we're never going to get a market correction. Like, I just haven't seen that happen.
Yeah. So the last important low was the March low, which was the banking issues.
Exactly, the banking issues. So I think there's some good themes that I'm looking at. The one that I'm watching most closely into the summer, this is really what I'm most closely focused on, is the crypto theme. Okay. And if we look here, similar to AI, where there was like the NVIDIA catalyst that really kicked things off, we have the potential catalyst, which is the BlackRock ETF that was already filed for, and that could potentially be approved in August. What I'm noticing here in Bitcoin is we had basically like what in hindsight was a big shakeout for a couple of months, and we just zipped right up the right side of this base very quickly. Now we're just putting in a sideways pattern, but really what I'm looking at is on the weekly time frame. If we look over here on this weekly chart, this right here is our yearly value area high. It's up closer to about 35,000. And I think if that ETF gets approved, I don't really see why we can't get up to that 35,000. We're seeing pretty much every other risk asset. Like if we look at, for example, again, the NASDAQ, this one already broke beyond its yearly value area high and then had a really fantastic move beyond that. So yeah, this crypto trend, it's sort of been falling behind equities, which have really ripped. And I think over the summer, if we get that approval of the ETF, I think that one could be a good mover. So I'm trying to find like little trades where there's actually a real catalyst or an actual event and kind of focus on those, while I know there's a lot of big risk in the overall market.
Okay. Do you look at grains? No, let's look at this VIX. Go back to the VIX. All right.
Yeah.
So tell me, hated index, guys selling vol all year long, cleaning up. I heard that we're hitting record highs of VIX calls being traded. I mean, there's people on both sides of the trade, but the volume, we have record volume in VIX calls over last week. And it's not like there was a lot of move, it was, making new lows there.
Yeah.
So I'm curious.
Yeah, that's definitely something I've been looking at as well. What's strange is like I saw that same exact stat. I also saw that in this June VIX expiry, there was a ton of VIX calls that expired worthless. But I would think, this is the VVIX. which is measuring the price of options on the VIX. I would think that if we were really getting like crazy demand for calls and like everyone's betting on a long vol event, I would think this VVIX would be a lot higher. If there's like huge demand for the VIX calls and we're just not really seeing it. So it's a little strange.
Yeah. I wondered if you could make anything out of it. To me, it's, there's a lot of call selling going on too, right?
Yeah,
and that's what's been working forever.
Exactly. I mean, to be honest, like all of the positioning indicators that I look at, they're really saying that there's a lot of investors that are getting heavily involved in the market. I mean, I think there was a lot of hedging going on in the first half of the year, but those hedges just didn't work. Like if we look at, this is the Naeem Exposure Index.
Yeah.
This is active equity fund managers, and it's just showing their exposure to the market. And right now it's at an 83.6, which is pretty high. So I think into the quarter end, like I said, I think a lot of investors are really just stopped into the market. And now everyone is positioned for the 40% rally in the NASDAQ to happen in the first half. So I think some of these like AI themes.
Anyone positioned for a 40% decline into the fall?
I mean, the VIX calls like you mentioned, but the VIX calls like you mentioned, perhaps there are some people doing that. But in terms of like the price action of the chart, when it goes up in a straight line, it's tough to think like, oh yeah, everyone's bearish. The market just keeps going up. So it's tough. I think at this point,
I don't think everyone's bearish anymore.
Yeah.
I mean, I have people saying, bring on David Hunter, who I've interviewed. He's a melt-up guy.
Yeah.
Okay. So anyway, everyone wants to, cheerlead. So
yeah.
I think most people are bullish. I think they're disparaging the bears, Kalanovich and all those guys, and people on Twitter. You'll see tweets, rest in peace bears and ha 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 bears.
Oh yeah.
Bears are in hibernation again, and they'll do reverse splits on long VIX products. So I think there's a lot of celebration by the bulls right now.
Yeah, I'm seeing pretty much the same thing. So I think up until about like a month ago, you could say like, yeah, we're really climbing the wall of worry, et cetera, et cetera. But
no one's worried about anything with the 13 VIX. I mean, they were worried for a few hours when there was going to be a march on Moscow. And that's what I mean. So there's another thing. So, there is an expression, anything that could go wrong in a bull market doesn't, and in a bear it does. And, it's just like the banks. People think that's behind us.
Yep.
Okay. Oh, there wasn't a civil war in Russia. That's behind us. So all these things, people are just fearless right now.
Yeah.
So, and it would have been a different story if you'd gone into Moscow. So we're like one event away from changing these grinding, like that Apple chart. You have like one $5 down day, and that whole uptrend from the March lows will be negated.
Exactly. So I'm seeing the same thing, and I think once we get this flip into the next quarter, that is really when we could start to see some of these things. Like I know you guys were talking earlier about the TLT.
Yeah.
I think like say if you do have like your portfolio is long and you've participated in a lot of these gains, I think this could be a pretty good diversifier right here.
Yeah.
Let me just
maybe they work the way they used to. Part of my I think that yields could drop on a risk off event.
Yep. Yeah, and I think what we're seeing here is TLT.
I'm supposed to be asking you what you think. Do you like TLT?
I like it here. So I've been trading the TLT pretty much all year so far, and I've been trading this range. And so far this year, it's been a good trade for me. I was lucky enough to be long the TLT when that banking crisis kicked off.
Yeah.
And I think that's really the benefit of the TLT, because let's say like you're just not positioned in this thing, you know, when something like the banking crisis kicks off, that's where you just get a huge gap higher in an instrument like this. And it's not really like you can predict, you know, when the next shoe is going to drop or when we're going to get that really recessionary data point or anything like that. So that's why I've kind of just been keeping a position in this thing. And I've really just been trading this range. Right now, I did establish a position in it maybe in the last like 3 or 4 weeks.
Yeah.
And to be honest, it just looks like the supply here is just starting to dry up. And this thing is starting to move up the right side of its base.
Yeah, closes over 104 are going to look pretty good.
Yeah, so here's another thing I'm looking at. This is really cool. So on the TLT, you know, on these charts, I have the value areas, which are pretty much just market profile levels.
Mm-hmm.
And what I like here is, if you look, the monthly value area for June, here we are. We've just been trading inside of it all month. So really just a sideways move. This right over here, this shaded area, is going to be our new value area once the calendar flips into July. And if you look how thin this new monthly value area is, a lot of times when you have a thin value area, it just means price has really been tight for a long time. That's where you can get bigger moves in an asset when the price is really consolidated. You can see here, it's trading right around all of these key moving averages, and all the moving averages are kind of bunched together.
Yeah.
So that's why I kind of like this one. Like if you are just like, yeah, you know what, I'm long the market, you know, it's been the best trade. I think this is a good asset to have as well, because if we get one of those shock events, whether it's geopolitical or whether it's the economy, I think this could really help the portfolio.
Yeah,
So
it could be
I
a
have
good
it in.
hedge. It was a terrible hedge a couple of years ago till we bottomed.
Mhm.
All right. Well, you know, Andrew, I really like your approach to the markets and how you look under the surface for things, and very, insightful things that you bring up during our interviews. So, best way for people to follow you or get in touch with you, subscribe, be part of your trading family.
Yeah, best way to get in touch with me, you can see me right over here on Twitter. So we're at Real Pristine Cap. And then we also have our Substack right here, which is pristinecapital.substack.com.
Okay.
So you can check this out right here. Yeah, and that's the best way to get in touch. We do a nightly research note, and then we also have a Discord as well.
Okay. All right, Andrew. You're already my trading warrior brother. I hope you have a great summer trading season, and
You as well.
catch up with you in the fall. Rooting for you, buddy.
Absolutely. Likewise, Dale. Thanks so much for having me on.
All right. Andrew O'Connell. Follow him at Pristine Capital. And as you can see, there's some very nice insights, the way he looks at things. We can learn from everyone, and I think you could learn from Andrew for sure. So that's a wrap, everyone. You're welcome, Laura, AJ. They're thanking you, Andrew. And you could join the team in 17 minutes on the Morning Edge. Good hunting the rest of the day, everyone. Don't just count your pips, count your blessings. Adios.